Yeah, hello and welcome to another update video about ADA. So it's getting interesting. The price is in an area where it certainly could create a peak for this wave one. Yeah. However, and I have to say that very clearly because a lot of people misunderstand, without a clear evidence, for example, a small five wave decline below the last swing low, which is here 37.1 cents. The general pressure, the price pressure will remain higher. We will have more buying pressure. Now, it did something that I mentioned to you yesterday only in the video, which is a so-called throw over. That sometimes happens towards the end of such a rally. It did that. It created this so-called throw over, which sometimes can be a bearish signal when it comes back down. Now, it was nothing significant really, but what you sometimes get is really strong move up, a really strong move up, and then you crash down again. Well, it wasn't exactly like that, but it did a so-called throw over, which indicates that we could get close to the end of this rally. But again, as I just said to you, without any indication that this rally is over, like a five wave decline, we have to assume it's going higher. Yeah, that is just what it is. Now, in this, let's say, classical diagonal structure, there is a certain limit for what a wave 5 should ideally do. So at the moment, I'm counting this here still as the wave 5 of 1, indicating that we could get close to an end here soon. Important to understand, key support here is that 37.1 cent level. Yeah, so this is really the key support against which we can focus here on higher at the moment. So the trend is clearly up. Because we never really had a breakout to the downside of that wedge, even though it has enough waves to complete it. But of course, a trend goes as long as it goes. We're getting squeezed here soon into an apex, but this can go on for a while. But I think it's getting close to its end, I mean, these can only go on for so long, and then there will be a breakout because these support resistance areas get too obvious and it becomes basically too easy to obvious. When it's too obvious, it's obviously wrong. So what I'm looking at here at the moment is that this could still be the wave 5. So it can certainly still push higher. Maybe in another throw over, which will then result in a decline. It could certainly be that this was just the A wave of the wave 5, because in a diagonal, if you don't know that, each of the subwaves have 3 wave structures. So also the wave 5 would be an ABC pattern. Wouldn't be surprised to see here a wave B now and then another rally in wave C. Here, very important that if we take a more traditional stance here in such a diagonal, ideally the wave 5 length should be constrained. Yeah, it should not go above 42 cents. Now, it certainly could, but then it's probably a different count. Because if it goes above 42 cents, yeah, above the 1-to-1 ratio here, then it's not, at least not this type of diagonal anymore. Because the wave 5 should be shorter than the wave 3. Same way as the wave 3 here was shorter than the wave 1. Also in a diagonal, the wave 3 must not be the shortest wave. So hopefully that makes sense, because if I have the wave 3 as the shortest, the wave 5 would be longer, the wave 1 would be longer, but this is not allowed. So that means I would have to readjust the count, have to look at other possibilities. In this particular count, the scenario is getting close to its end. So either if we break now to the downside, then I would have to count this as the wave 5 complete, and we're looking for a signal below 37.1 cents that the uptrend is over. Or if we push higher, we are looking for a breakout to the upside, but it should be constrained by 42 cents. Now, listen very carefully, because a lot of people don't, sometimes don't listen. Of course, it can go above 42 cents, but then it will be a different wave count, maybe something more significantly bullish. This particular scenario and also the alternative scenario I showed you indicate that this is getting close to the end. Because this is one case here, the one scenario, 1, 2, 3, 4, 5, where this wave 1 was finished and we're coming down in an ABC. Or the other pattern is that I showed you before is that all of this was a wave 1, this was a wave 2, this is another wave 1, and we come down in another wave 2, a 1-2-1-2 setup. If we go even higher here, then we would have to make the case that we had a very shallow wave 2 somewhere, a very, very unlikely shallow wave 2. But as you know, unlikely stuff happens all the time. It just doesn't give us a clear trade setup. That's the problem. Okay. And that's where we are at the moment. And again, trend is up. What would be key support if we now come down in this B wave? So the B wave support, the critical one for the B wave is normally here the 78.6 FIB, ideally a little bit higher. So it ideally in this particular scenario, ABC, it should not drop below the 78.6 FIB level, but it probably won't. If in the, if this was an A wave, this here is the B wave, and in the B wave, we've got an ABC, then I think we should be looking at something here between the 39.5 and the 38.6 cent level, between the 38.2 and the 61.8 retracements. So yeah, it's getting very, very interesting. I mean, let's also add some other things onto the chart here, because something that can be helpful. For example, some moving averages. Let's see if they can give us a bit of a hint about where we might be heading. What obviously we need to change the colors first here. Let's use white for the first one. Then we go maybe here purple for the second one, and maybe let's go yellow for the third one. And what we can use is, first of all, the 20, the 50, and the 200. Now they are the most basic ones I like to use. These are of course now based on the 1 hour chart. You can see that we are on the 1 hour chart above this so-called ribbon. We are above all of these moving averages at the moment. But more important, I think, are the ones on the daily. Now on the daily chart, if you look at this, the yellow one is the 200-day moving average. So we have now broken, similar to what Bitcoin did a few weeks ago, we've broken above the 200-day moving average. Now the daily candle isn't really closed yet, but this looks as if it had some bullish implications. Now, okay, we need to hold now above that level, and we are still in this sort of wedge pattern. Okay. By the way, I don't know if you know the gold chart. The gold chart looks really, really similar at the moment to what ADA is doing. It's quite funny. Yeah, so we are certainly in an uptrend. Yeah, we are above these moving averages. We are going to get a so-called golden cross probably in a few weeks if it carries on like that, but we are still quite far away. Golden cross is a bullish indicator. It means the purple line crosses above the yellow line. I don't normally pay too much attention to it. It's a lagging indicator, but when we had a so-called death cross, it obviously was already like a third into the bear market, but it was a reliable signal. And also the so-called golden cross was last time here. I mean, if you compare it to what happened last time, right? This was March 2020. Did we get we also got a golden cross here. It also took a while, right? And this didn't happen, in straight away. The market also had to move to get that golden cross 145%. So what you need to understand is you can't call out let's say a bear market low without significant price action. Also here, it moved 145% before you got that signal, and that would be today. I'm not saying it will be exactly the same, but so far ADA has only moved 68%. Okay, so to move 150%, I'm not saying it has to do that to get that golden cross, but we would be somewhere around 60 cents. Okay, so that's why sometimes it's worth waiting for these signals, sometimes not. I think it's just worth knowing where we are with respect to that. And we're certainly in an uptrend. Also on the 4 hour chart, we're above these moving averages, and you can see how they provide actually nice support here on the 4 hour chart. I found the 8 hour chart quite useful, and then you can see how actually the 50 period on the 8 hour provides like an automatic support line. And it's worth watching. And if we break that, yeah, that would be another indication that it's actually coming down in this wave 2 finally. But at the moment, as I said, the trend is clearly up. And if you remember what I said when I think we're along the way here, I said this could become quite a substantial increase, what we're doing here. Because if this is indeed even a 1-2 setup, so something bearish, we could retrace well into the 40-cent region. Now we're doing that, but I think it's turned into something more bullish now. Which we will get clarity about if we come down into this support area eventually, but we're probably not ready yet. Okay, and that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.